Hey, it's Thursday's Market SITREP here at Top Gun Options, Whiz, the primary and weekly options model portfolio manager here at TGO. And kind of a mixed bag of economic data today. We saw weekly unemployment claims come in a lot worse than forecast, and the previous weeks were revised up a little bit as well. Some flash manufacturing PMI, kind of came in line, and HPI, if you don't know what that is, it's a mortgage indicator. Mortgages backed by Fannie and Freddie, and that came in essentially in line. And the Conference Board's leading index of economic indicators came in line. So as you can see by the reaction in the market, up 50-ish, up 11 on the SPOOs. This is what we've seen all week, folks. Right? I mean, just let's take a look at essentially what's going on this week. This up 50, down 50 on the Dow, and up 11, down 11 on the S&P. Well, backing out the chart, folks, we really are starting to see this thing start to break. It's just a matter of time. We're showing a little bit of strain, and again, it's really getting tired to say, but it's the Fed. There's our June freak out about what the Fed might do. Here's the they're not going to do anything, and here's the realization that they are going to do something. So that's what's going on in the market, guys. Essentially, this really isn't all these economic numbers coming in line. You would think would be bullish, and because we know the Fed's leaving, but that's why you're seeing this kind of mixed reaction in the market of just kind of being up a little bit, is because we know that it's kind of good news, but it's also kind of bad news, because that means the Fed most likely is going to taper. Now, we got the meeting going on in Jackson Hole, started today, wraps up tomorrow. We should be hearing stuff drips and drabs starting to come out of that meeting. But again, like I said, the heavies aren't there. Mario Draghi, Carney, and Bernanke, first time I think since the 80s, the Fed chief wasn't there. So very interesting message that is sending, at least to me. And I thought this was great yesterday. If you guys watched Comedy Central, CNBC, anybody see this yesterday afternoon? Obviously after the Fed minutes came out, the market imploded, and this guy, the Steve Leisman guy's like, ignore this, ignore these reactions. It's always wrong. And then this other clown, Kramer, comes out and says, best nailing it in ages. This love fest cracked me up. And I'm like, really? And I'm like, I'm going to sell the hell out of these comments. You do the anti-CNBC trade, folks, because as soon as this guy said, ignore, and Kramer's like, oh, this guy nailed it. That's exactly what happened in the market, all the way down below where he said, just everybody, this is the wrong reaction, and the Dow continued to plunge into the night, the Dow future. So it really cracked me up. So folks, be careful watching Comedy Central and doing anything that they tell you to do, or they're throwing darts, okay? A failed hedge fund manager and a guy who's never spent a day in the business world in his entire life, these are the guys that we're listening to. So it cracked me up. If you didn't see that, you got to go to zerohedge.com and find this clip to watch the love fest. It was like Oprah and Rosie O'Donnell making out. It cracked me up. So, all right, guys, I got to run. Good stuff going on in our model portfolios. Weekly options model portfolio up about $2,000 this week. Obviously, 100% more than my mission objective of wanting to achieve at least $1,000 a week average. And we're up about $2,000 right now with a Chipotle iron condor that's going right down the pike, and a Netflix iron condor that's still got about a potential another $1,200 to go. So we could finish the week, knock on wood, with profits of about $3,200 on $10,000 in risk. Right, 32% return in 1 week. That's pretty shit hot. All right, guys. I'll be back tomorrow with Friday's market wrap-up over at Wealth Creation Investing. We'll see you. Have a great day.